In this video, I'll walk you through how the PAYE system works in the UK. This guide is essential for UK employers, employees, accountants, and accountancy students. Packed with valuable insights, this video will help you fully understand the UK PAYE system. Be sure to watch till the end to get the most out of it. PAYE is the system used in the UK to collect income tax and national insurance contributions directly from employee income, ensuring compliance for both employees and employers. PAYE scheme is only required where at least one employee earns at or above the lower earnings limit, which is £123 or more per week for 2024 to 25. So, if all employees earn below this amount, there is no requirement to set up PAYE scheme. However, once a PAYE scheme has been established, payments to all employees must be reported on the FPS, regardless of the level of earnings. When a business takes on its first employee such that a PAYE scheme must be established, the business must register with HMRC as an employer using the HMRC online service. The employer will then decide whether to use a payroll software package, or HMRC's basic PAYE tools if there are not more than 9 employees, or whether to outsource the payroll to a payroll provider. The new employer will need to report the start date of employment, the employee's address and national insurance, tax code on the full payment submission for when the employee is first paid. In the UK, the financial year runs from the 6th of April to the following the 5th of April. When an employee joins partway through the tax year, the new employer must request a P45 form. The P45 is a document provided by the previous employer to an employee upon leaving their job, containing details of pay and tax from the start of the tax year up to the employment termination date. This helps the new employer calculate the correct tax deductions moving forward. The P45 form includes the tax code used by the previous employer. The new employer will continue using this tax code until HMRC issues an updated one. The employee keeps Part 1A of the form for their records and provides Parts 2 and 3 to the new employer. No part of the P45 is sent directly to HMRC. It remains between the employee and their new employer. If the P45 relates to an earlier tax year, the employer will have to ask the employee to state which starter declaration applies to determine the tax code. This will also be the case if the employee does not have a Form P45. For example, if it is the employee's first job since leaving education, or if the employee has another job. When an employee leaves an employment, the employer must include the date of leaving on the FPS submitted when the final payment is made to the employee. Employers calculate and withhold income tax and NICs on all eligible pay income using payroll software. Pay income includes employment income, pension income for ex-employees, and social security payments like statutory sick pay and statutory maternity pay, taxable earnings, salaries, bonuses, allowances, and severance pay. Non-taxable reimbursements. Legitimate business expenses aren't taxed. However, any excess reimbursements are subject to pay. Non-cash payments, benefits, such as readily convertible assets, for example shares or tradable items, may also attract PAYE. Employers must use Realtime Information, RTI, to send PAYE details to HMRC each time an employee is paid. The full payment submission captures all relevant income and tax data, including working hours. This information is sent every time an employee is paid, rather than at the end of the tax year. Each time you pay your employees, you must send an FPS to HMRC. This tells HMRC how much you have paid each employee and how much tax you have deducted. When an individual receives certain benefits such as universal credit, the HMRC will receive report of his earning each time his employer report his earning through Realtime Information system. Pay, deadlines, and making payments. Pay payments are typically due on the 19th or 22nd of each month. The exact date depends on how you make your payments via checks or electronic payment. If you miss a payment, you may have to pay a penalty. You can make your PAYE payments online, by phone, or by post. The methods available to you will depend on your business size and circumstances. Important end-of-year forms and procedures. The final payroll report for a tax year, whether it is a full payment submission or an employer payment summary, must indicate that it is the final report. At the end of each tax year, there are certain forms that employers and employees need to be aware of. They provide a summary of income and tax paid during the tax year. P60. This form is given to employees by their employer at the end of the tax year, no later than the 31st of May following the end of the tax year. The employee will then use the details on the P60 to prepare his own self-assessment tax return. It shows the total amount of tax and national insurance they have paid, P45. This form is given to employees when they leave a job. It shows how much they earned and how much tax they paid in that employment, P11D. This form is used to report any benefits in kind that an employer has provided to an employee. P11D must be submitted by the 6th of July following the end of the year in which the benefits were provided. Taxable benefits include items like company cars and private healthcare. For a deeper dive, check out my YouTube channel, where I cover both taxable and exempt benefits in detail. I also have videos with step-by-step calculations for car benefits and living accommodation. Don't miss those to gain a clear understanding. Penalties for non-compliance. A late filing penalty will be charged for a tax month where a full payment submission submitted late during that month. A penalty will not be charged in respect of the first month in the tax year when a return is filed late. In addition, a new employer will not be charged a penalty if the first full payment submission is submitted late, but within 30 days of the due date. Where a late filing penalty is charged, the amount of the penalty will depend on the number of employees within the PAYE scheme. Where the number of employees is not more than 9, the penalty will be £100. This increases to £200 where the number of employees does not exceed 49 and £300 where there are not more than 249 employees. The maximum penalty is £400 for schemes with 250 or more employees. Where a return is 3 months late, a further penalty may be charged. The amount of the penalty is 5% of the tax and NIC that should have been shown on the return. Penalty notices will be issued quarterly in July, October, January and April. Any penalties will be due for payment within 30 days of the date of the penalty notice. Interest will be charged where a penalty is paid late. The decision to issue a penalty or the amount of the penalty can be appealed against. Penalties will not be charged if there is a reasonable excuse for the late filing. Remember, insufficient funds and/or relying on a third-party support are not reasonable excuses. Reasonable excuses include the death of a close relative around the time the return was due to be filed and health. Thanks for watching. Don't forget to like, subscribe and share. Stay connected and feel free to reach out if you have any questions.